What's going on, everybody? My name is Zach Hartley and I'm a day trader based in Calgary, Alberta, Canada, and in this video I'm going to walk you through how I determine my position size when entering a day trade. Here is everything you need to know. Let's go. Okay, so number one here, position size. What I mean by this is how much money do you place an individual trade with? How many shares are you buying? How many dollars are you investing into that individual trade? Well, I determine it using a couple of steps. Number one here is I first choose my maximum loss percentage based on my full portfolio size. For me, I usually use 2% of my portfolio. So for example, with a $10,000 portfolio, my maximum loss on an individual trade should be $200. That is the amount of money that I am risking in order to enter the trade. Now, step two here is to divide your maximum loss, $200 in this example, by the risk on your trade. The risk is determined by where you put your stop loss. For instance, if you buy stock XYZ at $100 with a stop loss at $90, your risk is $10 per share. If you divide the $200 maximum loss by $10 per share, that means that you can buy 20 shares in this position. Now, why do we do this? Why is it so important, and why am I emphasizing this so much? Well, the answer is because it reduces your risk. It eliminates the chances of you blowing up your account, and this is a strategy that you can use to make sure that you don't take any major losses. For instance, if you have a maximum loss of 2% per trade, you would have to lose 34 trades in a row in order to lose half your account. So by having this structure, by having this protocol, and by having these limits on your trading, you can reduce the chances of taking major losses and blowing up your account, especially in the beginning as a new trader. Now, in summary here, your position size is going to be a factor of your maximum loss percentage and your stop loss on the trade. That means that it's going to change with every single trade, and you need to recalculate your position size on every trade that you take. The math that you need to do is your maximum loss divided by your stop loss equals the number of shares that you can trade. Your maximum loss is the total amount you're willing to lose on a single trade, and your stop loss is basically the risk that you're taking on the trade. In our example, it was $10 per share. The reason that we do this is because this is a risk management strategy to make sure you do not blow up your account, and my advice is that you should only increase that maximum loss percentage when you're a profitable trader, you're feeling confident, and you're actually doing well. Now, if you want to learn more about how to become a profitable trader, you should check out my course. It's called Day Trading for Beginners and is a step-by-step guide to get started day trading profitably. It is 8 hours long. It has over 60 videos in it, and there are live recordings of my pre-market prep and my live trades, so you can see exactly how I'm applying what I teach in the course to my actual day trading. If you're interested in checking it out, you can use the discount code position size for 50% off the course, and I will link it in the description to this video. Now, that's it for me. Thank you so much for watching this video to the end. I sincerely appreciate it, and good luck trading, good luck investing, and we'll talk to you soon.